Intercorrelation and interconnection are incredibly important things for traders and investors to understand. If you're looking at Bitcoin and saying, why is Bitcoin going up? Or for example, Tesla. Why did Tesla go up? Why did Microsoft go up? Why did Nvda go up? Or into the crypto space, why did ADA, Solana, Doge, or XRP go up or down? The answer is inside the cheat sheet. The cheat sheet has 7 rows. You can see these rows here. I'm going to give you some insights into how to read the market at an absolutely professional level. So many people get disengaged from the market because they unfortunately get in and out at the wrong times. If you can relate to buying high and selling low, this video is really going to help you out. Let's run the numbers. Welcome back, Elite Service members and CTKS family. My goal is to assist you to become more of a financial and emotional blessing by knowing where to buy and sell like the institutions do. And the best way to do that is to grab the CTKS Method cheat sheet, which is available from ctksmethod.org. If you scroll down a little bit further on this page, you'll come to the official ticker list. This ticker list is what I refer to all the time. It's a great resource. We're going to go through a pretty rapid run through the cheat sheet. Now we're going to specifically look at the watch list. We're going to look into row 1 and row 2. Row 1 and row 2 give you an indication of risk on or risk off sentiment. One of the things that we can see here is that the VIX came down in the last trading session. When you're looking at a headline number, it's really difficult to understand the directional correlation and momentum, so we need to dig in a little bit further. When looking at the cheat sheet, we're here looking at row 1, which is the VIX, the DXY, dollar yen, 10-year, 2-year, and oil. This is how I teach the profiting students how to look at directional correlation and intercorrelation between charts. This particular blue line is Bitcoin. We can see Bitcoin was rallying and started to level out. When looking at directional correlation, you're seeking to understand, is a specific chart, and this candlestick chart is the VIX. The VIX is coming down. What's happening to Bitcoin? It's going up. This is an inverse directional correlation. And what do we see with the 10-year? The 10-year is coming up, and also crypto is coming up. Bitcoin is coming up. If Bitcoin comes up, the alts are coming up as well. A lot of people put a lot of faith into Bitcoin dominance. Well, it's a good measure. But when it comes to Bitcoin, if Bitcoin is going up, the alts are going up. If that is the case, it's already alt season. That's why I say Bitcoin dominance is good, but just understand that no alt can escape Bitcoin's gravity. When we look at the DXY, we're seeing something pretty interesting. A lot of people say that the DXY cannot go up and Bitcoin cannot go with it. Price reality is saying something completely different here. Beware of the rules. There is a rule. Sell in May and go away. If you did that with Bitcoin, you're probably kicking yourself. Just be careful of rules. They can apply in 8 out of 10 cases, but the 2 cases, they're going to be painful. So just look at reality and see what is actually occurring. The only real reality inside price action, which is price reality, is that every single chart moves between structural resistance and structural support. That's it. That's the one rule that you realistically need to know. And when we look at dollar yen, it's going up with the DXY and Bitcoin is following it. The 2-year, you can see that directional correlation between the 10 and the 2-year and oil. Also, noting that the VIX futures has been coming down, we're starting to see a little bit of a kick up at the current time. And that kick up is responsible for these kinds of actions, so please be aware. Looking into row 2 of the cheat sheet, as the profiting student members do, and this is a template available inside that course. When we look at junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, we're also looking at the forex pairs and index futures here. One of the things that you notice, junk bonds and Bitcoin have directional correlation with each other, and it's a positive or direct correlation. The euro dollar has an inverse correlation. The Aussie dollar has had an inverse correlation. Now, the interesting thing with the Aussie dollar, it's typically a really good risk-on or risk-off indicator for Bitcoin. But just bear in mind, there are always changing of the guards, and these relationships shift like shifting sands in the Sahara Desert. It's exactly why you must keep on watching them. Now, we've seen gold come down as Bitcoin has gone up, and there are specific reasons for this. We can see a divergence between silver and gold. Again, there's a real reason for this divergence. And we've seen copper starting to get back into alignment with Bitcoin's price momentum. I've always referred to Bitcoin as the best risk-on or risk-off indicator inside all markets. If you look at Bitcoin from this perspective, you're looking at it correctly. The one thing to note, Bitcoin comes up if the major indexes are coming up. There is a specific rule that we use for that. If you know that rule, please pop it into the comments, and you are awesome. Right now, the bus driver of risk inside the markets is undoubtedly the VIX. The VIX translates through to the major index futures. If the VIX goes one way, the futures are going the exact opposite. And not just the futures, the indexes are. Looking into row 3, which is the S&P 500, the Dow, the Nasdaq, and the Russell, what we can see, and this is exactly what row 1 and row 2 are telling us, the major index futures and the major index propers are coming up. Now, what does this mean? If the majors come up, it's going to drag Bitcoin in that direction. There's a rule for that. There are so many rules inside financial markets. If you understand the rules, you're going to do incredibly well. So, what does this mean? We've got positive upward momentum inside the major indexes. And Bitcoin is sniffing out the risk-on sentiment. If it's risk-off, that means that the major indexes are coming down. If they're coming down, we would anticipate Bitcoin to come down as well. And just remember, price percentage change does not mean a trend change. I covered this off at the end of yesterday's video. If you made it up to there, you're awesome. So what we can see very plainly is that the major index futures are coming up. The VIX is going down, junk bonds is coming up. You're going to have extreme fear inside financial markets if you can't read across charts and stack probabilities. Rule 110 can really help you out. Overcome the fear of risk. A lot of times people get into the market and they have no fear of risk whatsoever. They've been told that the price only goes up, and they've looked at the newspaper, looked at the online sources, and that confirms it. When they get in, they find the price goes exactly like that. And of course, they get very upset because why the hell did it come down? It was just going up and up and up and up and up. And then when they bought unfortunately quite near the top. And then it just reversed, and they lost a lot of money because they listened to Warren Buffett's number 1 and number 2 rule, which is, of course, don't lose money. And they sold. If this has happened to you, you're not alone. It happens to all of us, and the problem is that price is always moving in a wave. Even in an uptrend, it's actually coming back, going up, coming back, going up. And if you time it incorrectly, you can buy when it comes up and you can sell when it goes down. You can buy when it comes up, you can sell when it goes down. And then eventually you'll say, oh, I just don't get this market. That's because looking at price alone is disastrous for your profitability. Having been inside financial markets for nearly 4 decades, I've got a lot of things to share with you that can really help you out. These rules I made for myself, and they were so useful to other people that I shared them. Going back to the watch list so we can see row 1, these headline statistics are not really very good. You cannot make an informed decision off one number or even off many numbers. You need to know direction and momentum. Also, intercorrelation and interconnection. It could sound a bit tricky at the start, but you'll definitely get the hang of it. One thing that we can also see, the major market indices were largely positive with the exception of the Dow. And when we look into the index futures, we can see they're pretty much flat, a little bit negative, but relatively flat across the board. Now, what does this mean? We know that the VIX has been coming down for quite some time. The indexes have been coming up for quite some time. When we look at the futures are row 3 references. The fact that the Russell 2000 is a little bit negative is kind of like Bitcoin being negative. Russell really feels it. He's a sensitive guy. Currently, at this point in time, the major market indexes are closed, and we saw some positive gains across the stock market. Across the crypto market, just moderate gains except for Ethereum. Ethereum did quite well. When we look at USTD dominance, that's a stable coin outflow. So this is getting less because the money is piling in to the cryptos, but at a reduced rate. And when we look to Litecoin and Bitcoin Cash, these are usually very good indicators as to what Bitcoin can be doing. So they do have relevance. Ethereum Classic can put some light on where Ethereum is going. Stacking probabilities is always really, really important. ADA did okay, Solana did well, Doge did well. And what you will find is that over time the memes tend to do quite well. So just keeping your eyes on those is a pretty good idea. We can see there's a bit of a mix in terms of the VIX references for row 1. Some are down, some are up. The VIX is trying to figure out, do I keep on going down or do I flatline for a while? If you ask the question, what does it matter? Really good question. So the VIX has been coming down like this. If the VIX does this and does this, we would expect the major market indexes and of course the crypto space to do pretty much the same. This is consolidation. A lot of people say, what causes consolidation? You're looking at it in real time. Consolidation is caused when intercorrelation and interconnection changes direction. Therefore, the major issue is that we can't realistically look at a specific measure to tell us what's going on inside the market. We need to stack probabilities. Directional correlation is one thing, but you need to know what causes price charts to hit something and retrace, to hit something and retrace, to hit something and retrace. That is the superpower. I'll give you an insight into what causes price waves. They're very important to understand. What you can see here, for example, is that we came up into structural overhead resistance after finding levels of structural support. We rebounded up, hit that structure across total crypto market cap, and then retraced. This coincides with the VIX coming down and potentially basing. If the VIX bases, you would expect volatility to the upside and to the downside. That's realistically what consolidation is. It can't figure out, am I going to keep on coming down or I'm going to flip up? When the VIX starts to flip up, we will see negative price momentum inside, of course, everything. Typically, all the people do when they get into a market is they say, I'm just trading and investing in Bitcoin, or I'm just investing in Bitcoin. I'm only going to do this, or I'm only in Nvda, or Apple, or Tesla, or Microsoft, or Solana, or ADA, and they only look at one chart. Looking at one chart will have you as roadkill inside financial markets. That is quite an unpleasant place to be. You don't want to get scraped off the financial road after you've lost pretty much everything or a good chunk of change. Therefore, one of the best rules that you can start with is always trade and invest under spot. Don't touch leverage until you master spot. But Ken, I want to get the best possible returns. If you don't know what you're doing, the best possible returns won't go to you, they'll go to someone else. And if anybody wants to do anything on your behalf, just tell them to go to hell. There are so many scammers out there. You must manage your own money under all conditions. That's the one thing that I've been very, very adamant for many, many years. Manage your own money. You need to know what to do. Please don't pass it across to other people. Oh, but Ken, all the rich do that. Well, when you're rich, do that. But on the path, don't do that. And you'll find the rich actually don't do that. That's a myth. They know exactly to the cent what's going on. Therefore, we've learnt about directional correlation. We've learnt about the fact that the VIX is driving the market. So long and provided the VIX keeps on coming down, all is good in the world. We've learned all about price waves, and they just reflect off structural resistance and they find basis in structural support. These are safety nets, they're not brick walls. If you're new to the community, please smash that like button and don't forget to subscribe. We have one of the best, I believe the best community on YouTube. In yesterday's video, I tried a different thing. I tried a white background and said, guys, what do you like? And of course, guys and girls, what do you like? And some people said, yeah, I like the white, and other people said, I like the black. Well, why don't we do the best of both worlds? Because why did I make it white? I wanted you to be able to see the structural levels underpinning price action. Now, this method of doing things could really help you out. Let's just focus in this specific area. When the price came up, it had, of course, levels of structural support below it, and it forged through two levels, got rejected, did a structural failure, which created negative structural attraction back to these levels. You see, it came back really hard, found a degree of support, tried to break out. All of these rejections were happening here, two structural failures, which immediately created negative structural attraction to the levels below. You must be able to read structural passes and structural failures. Therefore, what's happening currently with price action inside the entire crypto market? What we've seen recently is we came up very nicely through all of these levels of structure. And look at that positive CTKS gap. It just exploded up and then got whacked on the head. Another positive CTKS gap whacked on the head in terms of structural resistance. Now we know that the total levels are very important to keep your eyes on. Now, how do we get these levels? These are the finest, strongest, and most statistically significant support and resistance lines available inside technical analysis. I'd like to tell you a little bit about Level 1 and Level 2 standard certification. When we look at Level 1, this is the primary foundation that we use to mark up charts, but all the magic happens inside Level 2. They look like just pure dotted lines, but they're not. For example, when we look at Level 1 standard certification, there are actually a lot of things that we need to do in order to be able to mark up charts just from a basic stance. However, it's inside Level 2 standard certification that everything makes sense. There is a lot to it. You may think that it's just drawing a couple of lines on a screen. Nothing could be further from the truth. It is an incredibly fine art, but it's easy to learn. And I make sure that I go through step by step with you. Another thing that's really important to do is to understand where price can go by using three-dimensional price paths. The concept behind these price paths are structurally bound. Therefore, you need Level 1 and Level 2 standard certification, and then you draw the price paths with that knowledge. And we can see right currently Nvda is following the normalized positive price path. A big thank you to everybody who reached out inside the comments yesterday and let me know what they wanted to cover. Let's have a look at Tesla. Now, this is a Level 1 and Level 2 standard certification markup on Tesla. What we can see, Tesla came into overhead structural resistance around that 339 level. It has a very good structural support just above 332. And then we've got a negative CTKS gap. Now, what does this mean? If the VIX is just basing, we would assume that Tesla will do this as well. It will just get focused into this area. If the VIX continues to come down, we would anticipate that Tesla will break out to the upside. If the VIX does this and starts to come up, we have a negative CTKS gap, which we need to pay a lot of attention to. These gaps can get filled very quickly, especially to the downside. Now, what the momentum of price actually is panic. panic of missing out or panic of saying, I need to get the hell out of this thing. The key is it's all panic, either to the upside or to the downside. That's why the structural levels are not brick walls. They are gravitational areas. So when we saw these ceilings getting breached, and there's quite a few of them, and what you'll learn when you do the standard certification, and please reach out to me, directly message me if you've not done it. Investing in your future is a really important thing. You put your hard-earned money into the market. Why not make it be productive? One of the things that you'll note with these Stanfield levels, also called CTKS levels, when you get a lot of them together, they will slow the arc of prices ascent to the upside. But when you get the exact same thing on the downside, they will slow it to the downside as well. A big thank you to Nick, who wanted us to look at Nvda. Colin wanted us to look at XRP today, so let's go for it. And if you would like to look at anything from the cheat sheet, because it takes a while to mark up things that are not on the cheat sheet. That is, if you would like to see the markups structurally of any of these charts, please let me know in the comments. And quite a few other people had commented they'd like to see other things. What I did today, and this is specifically for Daryl, who just reached out and said, Ken, who's the bus driver of risk? The bus driver of risk inside the profiting course will make sense to profiting students. But it's basically these particular charts, these 12 charts here, all vie for the pole position of driving the bus of risk, either off a cliff or up the hill. So I just wanted to help out Daryl. Really good comment. So the VIX is in control of the markets, and we still have that association between the VIX and junk. We're starting to see old habits getting re-established in the euro and the Aussie. We could be coming up to a changing the guards moment, so please be aware of this. We looked into the structural levels of Bitcoin and also looked at structure on Nvda. Colin would like us to look at the structure on XRP, so hey, let's check it out. Okay, looking at XRP, what can you tell from this? Pretty much nothing. So when we mark up the standards, level 1 and level 2, and we pop that on, what we can see is a lot of structural overhead resistance that was rejected. When we tried to get above this structure, it's been rejected in multiple times. Now, is this structure, does it change throughout the month? No, it doesn't. This structure is drawn at the start of the month and it remains in effect for the rest of the month until the new month. Now, what did we notice? We had this structural rejection here, and all of this structure on XRP was playing in this area. What did that structure do? It reflected it back to this resistance line. Now, it can be a little hard to tell when you're looking at like this, but you can see here that structural resistance line is definitely there. And then what did we do? We managed to get across because the VIX continued to come down. This is why reading row 1 and row 2 is so vitally important. It plays across stocks, commodities, and crypto, and as well as the Forex pairs. It is incredibly important. I can't stress it enough. When you put money into one chart, you're actually looking at intercorrelation and interconnection through all charts. It's a bit of a mind-bending thing, but it's really important. So when we look at XRP's structure around that 260 mark, we've got a bit of a problem because it's got a substantial degree of overhead structure at the current time. But we know what we need to look at is the VIX. And how do we look at the VIX in real terms? Well, look at Bitcoin. What else could we use to stack probabilities as to where XRP could be going? Look at the major index futures. What you will find, the more that you apply CTKS structure, it is literally X-ray vision on where smart money buys and where smart money sells. It is a literal superpower. In order to defeat fear, you need a lot of rules and you need a lot of knowledge as well. I share my rules on a daily basis because I feel it's going to really help you out to see the market through the lens and through the eyes of somebody who's been here a pretty long time. Getting your mindset correct is very, very important. Fear is a curse that absolutely plagues our world. You become a better human being for trading and investing because you must directly master fear. And when you do so, you will unequivocally be more of a financial and emotional blessing to yourself and those you love. And this one's especially for Brett. Please let me know in the comments, what else would you like to see and what other things would you like me to cover on the daily channel? I'm here for you. I want you to succeed. Have a great day or night ahead, my friend, and Kate and I look forward to catching up with you again in the next video. Bye for now.